My name is Nathan Kolb, and I want to welcome you to today's Credit Safe webinar. So today's topic is talking European economic credit risk insights. So we want to talk about what's going on specifically in a couple of different countries that are represented by our guests today, and kind of overall what's going on in Europe from a US perspective. What do we know what's going on there, those type of things. So I don't want to be the person that tries to tell you all this because I am no expert in this area, but the two gentlemen that we have on today are. So it is my pleasure to welcome back, because they have been here before, our two guests. So we have Luca Berti from Italy, and it's Fierestad, I believe, but forgive my terrible American pronunciation there, from Norway. And they're going to tell you a little bit about themselves, why they're here today. And then we're going to just launch into some questions and everything. So Per, since I probably butchered your name, I will give you the courtesy of getting to go first here and telling us a little bit about yourself.
Okay, thank you, Nathan, and thank you for being invited. And actually, you did very well pronouncing my name.
Well, thank you.
Yes, that was absolutely perfect. So then he revealed my name, everybody. It is, as Nathan said, Per Fjerestad. And I'm the country manager of Credit Safe in Norway. And being a country manager of Credit Safe Norway, I'm part of the Scandinavian management group as well. So I have a little bit insight on the other Scandinavian countries as well as Norway. So I've been in Credit Safe Norway for 6 years, actually. Time goes by, but I don't know. Actually, I've been in the credit information business since mid-90s. So that means it's been a lot of changes during these years. I mean, we had the coming of internet, we had the millennium, and we had the finance crisis, and now the pandemics. So there's a lot of things going on that you never would expect and you don't know. And that's a good thing that we don't know. So that's kind of giving me some of the background to maybe be able to say something about what's going on today. I hope so, at least.
Great. You've definitely seen a lot of changes, and that'll be interesting to hear some of that as we talk today. And then Luca, why don't you go ahead and introduce yourself? Hopefully I didn't mess up your name either. And tell us why you're here today.
Okay, Nathan. Hello, everybody. I'm very pleased, very happy to be here and the opportunity to share our thoughts about the economic situation in Italy. So just a few words about me. I've joined Credit Safe in 2015, and I spent more or less 25 years in the data warehouse and business intelligence area, taking care of highly complicated projects related to data integration and so on. So I was looking for something to be part of, and that's it, because I started taking care of the products in Italy, and in 2017, I had the full responsibility of the country, and it is really exciting because I'm used to manage data and to work with data, and obviously Credit Safe is one of the best places to be in order to manage data and analyze data. So I hope to provide few useful information for everybody during this discussion.
Great. Yeah. So we've got a lot of experience here, different perspectives, different parts of Europe, obviously, northern and southern, and, we've kind of we're hitting everything on the extremes there, which is great. But, first question, guys, just from an American perspective, we know what's going on here, but even here, state to state, things are very different in the US. And a lot of times we're kind of caught up in our own world here, and we don't tend to look quite as far. But to give me an idea of kind of the lay of the land, what measures are still in place, regarding the pandemic, regarding COVID, that are affecting businesses in your areas, your regions of responsibility? So Per, why don't you start with that one?
Okay, yes, of course. So the measures taking place in Norway and Scandinavia in general, though. So I guess you mean what kind of help they're giving to the businesses. And first of all, all the measures taking place has been prolonged because we were expecting to. I mean, we're in the third wave right now. So we are
Right.
kind of closing down once again. So it's still taking places. And first of all, the most important measurements in Norway is from the Norwegian tax authorities. So you're able to have deferred payment and installment schemes for tax and duty claims. And you're scheduled for the installment scheme to start. We need to start paying back in April, but that is moved to July. It might be moved even more. So that's kind of quite a huge amount of money outstanding that kind of have a deferred payment for. I think it's more than 5 billion Norwegian kroner outstanding. So that is going to affect the market and the risk actually when this is going to be paid back. But it has helped a lot of companies, a lot of businesses has helped, and I was supposed to do that. The other thing is it might have helped business that maybe would have gone bankrupt anyhow. That's another thing to think of, but well, that's how it is. And then we have the business compensation schemes coming from the government, where the main criteria is that you have a major decrease in turnover as a result of the pandemic, and you have fixed unavailable costs, and then you are able to ask for business compensation scheme, and that is taking place, and that is still available to apply for that. And totally, I think it is both for the Norwegian Tax Administration and the business compensation scheme coming in. It is about 10% of all the businesses that has been helped.
Wow.
Totally, all of that. So yeah, so that kind of has been able to make the business, it's not running. I mean, they have helped them to stay alive so far. Yeah.
Okay. And Luca, what about as we move south here down into Italy, what are you looking at down there?
So just to give you an overview, I would say that we still have many measures in place to help the economy and the society. So considering the volume of such measures, so I can describe all of them in detail, but from an high level, I think we can highlight two main areas of action. So the first one, and the name is Fondo di Garanzia in Italiano, it means guarantee fund, okay? It's been provided by the Italian state, but this fund has been launched more than 20 years ago in order to provide a sort of guarantees or funding for company with credit access difficulties, But due to the crisis, it's been enhanced and heavily refinanced in order to help company to minimize the effect of the business contractions. So the latest reports I have that reveal the numbers, it's really interesting because if we compare 2019 numbers with 2020, it's clear that this tool has been heavily used and it has made available 84 billions of fundings and 73 billions of guarantee for more than 1 million subjects. So it has been very, very, it was and it is very important for us. The second area regards other two decrees. So one is the Cura Italia, so Heal Italy, Help Italy, and Decreto Sostegni, decrees that are still active and till the end of June 2021 at the moment, with a huge amount of various measures to tackle the effect of the emergency in various sectors. So from the empowerment of the NHS system to the labor market support. So in particular, for the labor market support in this moment, we have a lot of measures like fallout of salary compensation, for employees in case of forced stop of the business activities, compensation for companies and professionals, suspension of the loans payments, stop of the firing procedures, tax reduction for companies which don't use salary compensation. Obviously, to have a compensation, you have to match specific criteria. So you don't have to have more than 10 million of turnover, and 2020 turnover must be 30% lower than the 2019 turnover, and so on. If you comply, you can receive a percentage of the turnover loss, depending by the size of your company. So 60% for company below 100K, 50% for company with a turnover below 400K, and up to 20% for company with a turnover between 5 and 10 millions. So all of you could raise a €1 billion question now. are these measures kicking in? I would say that it's too early to answer yes or no. We see that all these measures have contributed to face the crisis in many economic sectors, but not in all sectors.
Okay.
And now the focus is moving from the emergency phase to the restart phase. But okay, we will cover this topic maybe later.
Sure. Yeah, I think it's a great way to just kind of drop in here. I did have a question for our audience, and I failed to ask it earlier, so I'm gonna interject it right now. So for those of you in the audience, what we'd love to know, just so that we have an idea of who's in the room and what's going on here, if you could just drop in and give me an answer to this, if you would. You can put it on anonymous. You don't have to tell us the details and everything, but the relative size of your company based on number of employees and everything, and the countries that you're doing business with in Europe. If you're not doing it right now and you're exploring, you can just put that. Or if you also do it with certain different, 4 or 5 different countries in Europe, just let us know, just so we have an idea of kind of where folks are, what standpoint they're coming from. And I see a couple of folks are already dropping in. So thank you so much for putting that stuff in there. And then I'm going to bounce it back over to our panelists here as I'm seeing all these answers come in. But for you gentlemen, this is kind of the crux of it. So we're going to kind of jump into the meat of it. And I know you both have a small amount of data and everything that you'd like to show, and a small amount of PowerPoint slides that you want to show. So hang with us, folks, as we go through these. But it's the best way to share this data. What really is the economic outlook in your country for business, I guess, is the question. What is it really looking like, and how is your country and the businesses within it faring? So Luca, we're gonna start with you, and go ahead and share your screen and show us the information, the data you have on that as folks are answering these questions, and then you can answer my question on that one.
Okay, can you see it?
Yes, you are great. Okay,
thank you. So again, your question is a really complicated question, so what we can do here, and together we can share the numbers, analyze the numbers, and have an idea of what is going on and what is the future outlook of the economic situation. So I would say that from a very high perspective, we could say that the improving phase in the European Union is continuing, as demonstrated by these 3 main indicators in the left graph. So the world trade level increased higher than the pre-COVID value. That's positive, I would say. The Brent cost returning to the pre-COVID level too, and that's another very important KPI. And the PMI index indicates the market expansion. So I would say that in the euro area, the expectations are moderately positive. And even if the confidence index has grown in the first 2 months of the year, there are sectorial differences, and the aggregate value can show. So overall, we see a positive expectations in terms of economic possibility, but from a very aggregate point of view. Some situation in Italy, where we had an increase in the industry and services sector's confidence index, which took the aggregate value in very over the average. But it's really, other economic sectors are really struggling in this moment. If we compare the Italian and the EU indicator, we see a GDP decrease in the last 2020 quarter greater than the EU average. Mm-hmm. But the expectation for this quarter is to bounce back to plus 2.3%. So it's positive, I would say. At the same time, the industrial production demonstrated a sign of recovery. And on the contrary, the construction area was behind the EU average. So we know, in this moment, it's really complicated. So the outlook is not maybe the best we ever see in our life, but it is slightly encouraging from also the consumer price a little bit increased. The unemployment rate is more or less in line with the EU average. So slightly positive is the outlook in this moment. And it's really complicated matter. So just to have a very high level overview, okay, Nathan, sorry for for this kind of.
That's okay. It's hard to get granular at this point and get into those details.
Yeah.
The high level is great.
Yeah, what is interesting is that what is changing. So, what's this situation changed, And I would say that it's interesting, this analysis, because this analysis made by the Italian Statistic Institute a few days ago, and despite its simplicity, in my opinion, it's really meaningful, because we should all agree that we are witnessing a sort of huge change, not only in the business area, but in our life. So the digital technology had the big boost and is still having it in this moment during the COVID crisis. And it is clear that one of the immediate side effects has been a significant acceleration of the digital transformation process in all business. Obviously, the impact is different among different sectors and different company size, but it can be stopped, in my opinion. So the most important change we see in Italy is related to the expansion of the broadband connection, because it was widely distributed, more or less on 40%, 46%, but it had a big increase of 12 points. So now it is clear, or better, it was clear, a big portion of the communication toward the customers, the customer base, go through the social media, thanks to a massive increase of the digital approach, webinar like this one. Now we are used to use this kind of tool, but we were absolutely not used to do it in 2019. So greater and better knowledge of this technology, and absolutely the need to have more data in order to face this unprecedented crisis generated a super boost of the e-commerce channel, cashless solution, and online payments. So what does it mean in terms of risk management could be the question in this moment. I would say that now more than ever, all the onboarding procedure for new customer must be reinforced, speeded up, and integrated. So in an increasingly faster and connected world, we can't afford to, download the reports, copy the value into our evaluation program, or worst, into a spreadsheet. And in order to understand if we can accept this prospect and which with limits, if we do this, we might lose the deal because a competitor stole it, So all the people, all the sales people are connected now in real time, and with prospect, they need immediate feedbacks in this moment. The main street is defined: data and service integration, bespoke processes, highly personalized processes able to merge internal data, official information, and open data probably will be the future. So the world is changing so fast, and we have to do everything quicker than ever, I would say. So assess the risk before selling. It's really important. Maybe during, a call with the prospect, using your mobile, just checking or typing the registration number of your company. We have to know if we can sell, if we cannot sell, with which specific payment limit, payment type, and being able to do this with all this information on the fly will be the future. And for, the control of the customers, being able to have integrated and automated monitoring of the situation probably will be very, very important for the future. And that's one of the highly probable scenario in this moment.
Sure.
And as I said, so in this graph, it's interesting because if we compare in this moment and the trends and of the latest 5 years of the international commerce, it is expected a bit of contraction in December in both directions, export and imports in Italy, because also the international commerce, it's very important for us because, we rely a lot on the international commerce. But the latest 2020 quarter showed a very interesting increase of 3.3% in export and 4.3% in import. So I would say that in this moment is a positive sign for our economy, because it's very important, because, after, 30 years of negative results for our economy, the export level in the last 2 quarters of 2020 took the balance of import and export. So it's very important for the Italian economy. And the sectors we made a big contribution are metal products, means of transport, food and beverage, and unfortunately, the major decrease are about the leather goods and clothing. So 2 important, components of the made in Italy.
Right. Yeah. Well, everyone's drinking Italian wine and cheeses, right, and eating the cheeses right now, and doing pasta. We're all cooking from home, and we love it.
Yeah. In fact, food and beverage are increased.
Exactly. I think I may be alone in adding to that. I may be the one that did all of that for that, and I think my waistline probably shows that as well.
Yeah, and what is relevant is also the direction of this export, because the export increased a lot versus the UK, plus 12%, US with an increase close to 8%, Germany more or less almost 7%, and China plus 20%, almost 20%. So that's another good sign, I would say, because despite the pandemic, but despite the crisis, we see that there are a lot of positive signs also in the international commerce.
Yes.
And just to terminate this overview on the Italian situation, few numbers. Okay, I decided to put few numbers on the screen, but just to give you an idea. So in this moment, it's really difficult to highlight all the risks, because we spend time on the opportunity, we spend time analyzing the figures, we shared the possibility to have a positive outlook in the incoming month, but we have also to take care of the risk. So, and what are the risks? So we know that we have 300 billion euro, more or less, is the amount of the credit held by banks in moratorium status. That's the situation, This means, on average, 2.7 million of subjects involved into this, amount of money, both company and consumer, Okay. So this huge amount of money is going to expire within June 2021. So I don't know. We were rumors about the possibility to extend the moratorium period, but we have to face this situation soon or later. So, taking into account the EBA consideration, EBA stands for European Bank Authority, at least 20% of that value is at risk. So it would lead us to more or less 60 billions of new NPL. It's a huge amount of not performing loans. So that's a reality, or it's a possibility. On the other hand, we have the official data account from Bank of Italy. And Bank of Italy says that the banks increased them coverage by 30%. And the level of the bank deposits increased by 7.5%. So as the propensity to save money of family rises to 10%. So what does it mean? So the banks are worried because, are working in order to be prepared. And, both consumer and company are accumulating money for investing, okay? But in this moment, they are waiting. So it is expected an increase in consumption in early future as the GDP. But this is the right time to be careful. And it is also the right time for trading, I would say. So the bank trend is to move toward real-time data in this moment, to analyze these informations. And I think that it's a huge opportunity for us to change our economic outlook, to change our country for better, because it is very important to, use this crisis, this strategy, in order to, try to do something for our world, in order to increase our capability, our situation. So we see both risk and opportunity. Now the deal is, the challenge is being able to manage both carefully.
Absolutely, yeah, because we don't want to have that crisis happen of all those loans being called and non-payment and all of that, when folks have money in the bank and they're just not paying, and there's that whole setup. Absolutely, I totally see that. Right. No, that's great points, and I love seeing all that there. And I know it was a high level, and I appreciate that,
because it's quite complicated also too. That's okay.
Sure, there's so much in there, and Europe is such a big and vast area with so many different economies going on. So I love that you were showing some of the European stuff, and very specifically in Italy, kind of what was going on in your area. So Per, we're going to come to you on this as well, but as you're getting ready to share your stuff and get that up, I'm just going to give you guys the info that the folks here have had. And I did see a couple of questions come in. I promise I will get to your questions. We're going to let Per finish his overview, and then I'll ask these questions. But overall, guys, we have companies from all sorts of sizes, absolutely huge banks and manufacturing companies to smaller, a couple of 100 employees, 100 employees, something like that, of just import-export companies. We have all sorts of stuff, and a lot of them are trading throughout Europe. Several of them are specializing more into certain particular countries. So, they have mentioned multiple times, I've seen Italy and Norway in here. So great that we're giving them some specifics on those two countries. But the overviews that were given on Europe, I think, are going to be used by everybody in the room. So folks, thanks for letting us know kind of who's here. And I think we're hitting kind of a good spot here for everybody. And Per, I don't want to take any more time from you, because I know you've got, again, some outlook here that you've already got up for us on kind of the economic overview in Scandinavia and specifically in Norway right now.
Yes. Okay. Thank you. So, okay, I guess you answered my question was if you can see my presentations, but then that's okay. So yes, what I was just wondering, I mean, I guess I can't see you and can't hear you, all of your participants here, but I know some of you might have been here almost a year ago when we had this last session of webinar, and it is actually almost a year ago, and I know what the conclusion from me a year ago was that there's a lot of uncertainty. We don't know. We didn't know what was going to happen, and we actually hardly knew what kind of hit us. So that was what the state was at that time, a lot of uncertainties. And we did fear and we did expect a kind of a sharper recession than during the global finance crisis, and then maybe a long-lasting recession as well. But the situation today is we know a lot more, and what we predicted actually didn't happen. So we're doing a lot better than we thought, at least in Scandinavia. But I think that goes, as Luca told you, I think that goes for Europe in general and from the US as well. So we're doing a lot better than we predicted, and we're doing a lot better than we thought. And the other thing is that this goes for the whole of Scandinavia. So it's the same numbers almost for both Norway, Denmark, Sweden, Finland, and maybe even Iceland. It's a little bit different in Iceland, but it's more or less the same numbers coming up. And that's interesting as well, because last time, and many of you know that, for instance, Sweden had a different approach to the pandemic. They didn't close down the same way that we all the rest of the Scandinavian countries did. But anyhow, the effect on the economy has been the same. So there's no difference in what happened in the Swedish economy to the Norwegian economy or the Danish economy. The only difference is the health problem, actually. That is a little bit different. But today we're going to talk about the finance. Sure. So, and another thing in general, I have to say that the Scandinavians has probably done better the financial than many others. There's many reasons for that. The economy in Scandinavia was pretty good before the pandemics, and we are not as dependent on, for instance, tourists as you would be down southern part of Norway, of Europe, sorry.
Mm-hmm.
So I guess Luca is more depending on the tourists sector than we are in Scandinavia. Actually, what we don't do anymore, we don't travel to the Mediterranean. We're longing for that because we're far up north. We'd like to go to the sun and go down and visit Italy and drink wine. We can't do that. And that's too bad, but it's even worse for Luca, who don't get the revenue coming in. So that's a kind of a difference. So we're doing quite good at the moment, and I guess last time everyone was kind of, I would call, almost dazed and confused, and of course it did affect the economy quite severe at that time. So as you can see, well, actually, I just had to mention before I go further on, this graphics coming up. It is a month old, and it's even looking better than today because I didn't have time to change that graphics, but the outlook is better than showing. But but the illustration kind of shows how we can what you can expect anyhow. But as you can see, we had a significant drop in the GDP. Oh, sorry, GDPR. I mean, of course, GDP. In March and April, it was in kind of a contraction of 11% at least, around 10 in Sweden, 11 in Norway. And then we had kind of a quicker pickup in the economy than we could expect. So what we did expect was that the economy would collapse. Yes, it did. We expected a long period of kind of contraction before it should start to pick up, but it kind of picked up quite fast, and it's been doing well since that. So overall in 2020, the GDP dropped by about 2% in Norway, about the same in Sweden, and we do expect a growth for about 3.2 in this year in 2021, and then it's going to be like 3 and 2%. So the growth is going to be all right, but I mean the drop that we had in March and April kind of set us back a bit. So the lines are going a little bit under than the pre-pandemic, what the pre-pandemic would show. So we are expecting that we will be kind of back on track in 2022 for most of the economy, but we do expect that we have a kind of starting picking up for real from this summer and ongoing. So it's going to happen a lot in 2021, but I mean, it takes some time, but in 2022, I think we should be back on track. For the unemployment rate in the whole of Scandinavia, it's not that bad. It's about 4%, and that's not bad at all. It's a little bit more than we used to, but it's kind of picking up as well. And what is interesting, and that might be related to what I talked about when I came into this meeting about the measurements taking place, that we're looking into bankruptcies. And for 2020, we had a 32% decrease in bankruptcies. And even more interesting, for those sectors that is most affected by the pandemics, that really needed to close down, like retail, food and beverage, transportation, and tourists, it has more than 50% decrease. So we would expect this to rise quite significant when they do have to pay back the taxes and that what is coming. But still, it is interesting. And I do believe that kind of one of the one way to explain that is that the economy is not like in a finance crisis where you have just kind of a lot of outstanding debts and loans, and that's what's hitting you, and that's causing the problem. The problem this time is that you close down. So economy is kind of in a state of hibernating, and some would say that they even were under siege or kind of taking hostages. So they just kind of froze down, and they don't have the ability to spend or get in debt in the same way as in the finance crisis. So there was a huge decrease in turnover in certain businesses, but still they are able to stay alive. And we might expect, and we just need to look into if that's going to be like this fall as well. Same way, we can see that there is a decrease in debt collection and for failing payments as well. So we kind of might have an uncertainty to what is going to happen when the business is picking up. Of course, a lot of the businesses is going to kind of quite rapidly be back on track on where they used to be. But
Sure.
some businesses, when we are starting trading again, they will have problems kind of coming out of the hibernation. That's what we kind of one way to look into it.
Absolutely.
Yes, and Luca talked to you a little about business adapting to the changes as well. And for one thing, Scandinavian is probably one of the most digital populations in the economy. So there is about 40% of the work can be done from home office. So the change from going into home office, closing down the business, I mean, it kind of went quite easily for most of the Scandinavian businesses, and that's going to stay that way as well, because I think what is happening is kind of this was an ongoing change. So the pandemic had kind of just accelerated the ongoing changes. So it was a change for more digitalization, a green economy, globalization, and all that is just kind of boosted a lot during this close down and kind of just got accelerated.
Sure.
So that's a change, and we're kind of prepared to do those changes anyhow. And I mean, okay, we just needed to have this kick back to do that. And another thing is that is kind of what I expect. There's a lot more focus on cost control. I mean, you're a little bit cautious after what happened, and there is a lower activity and there is lower expectations to each other. So we're giving each other more slack as speaking, and all that is kind of keeping us kind of, I mean, it's kind of getting out the hibernation of and picking up, but still I think it's going to be quite slow for a while, even after the summer, and we're going back starting trading again. So, but still, accelerating changes that were underway, and then we can see that in the retail business, especially while we kind of this happened before the pandemics, that we're closing down shopping malls and starting going on internet for shopping, and that kind of, I mean, during the pandemics we have to do that.
Right.
Yes. So for the international commerce focus, I mean, that hasn't changed in Norway. I mean, it's just the same as before, and it got quite a huge dip that as well for the starting in April and March. And it kind of the whole trading stopped. And for Norway, it was kind of critical that we have a lot of our export is fish, salmon to China and Italy and other large economies, and that just stopped for a while. And but after a while that picked up again. So it seems like you can see that the dark blue line is the export of traditional goods. I mean, it is as before. There is no change in that anymore. But the export of services like traveling, aviation, and all kind of service is still kind of failing. And it will take a while before that starts to pick up. And it goes same for import, because the import to Norway is very much services as well. That is tourists, as traveling, and that part will take some time before it starts to pick up. But in general, that's kind of how the economy is in domestic as well. What kind of it's a distinction between what kind of business has been affected of these pandemics. It was more like the service sector that had been affected of this pandemic, domestic and international as well. The traditional trading of goods is not affected of the pandemic at all anymore.
Right.
So that's kind of yeah.
Yeah, we found ways to make that still happen, but that person-to-person interaction that has to come with a service is a lot more difficult to deal with.
It's a lot more difficult to deal with, except for the kind of service to person that we can do from home. That is going out well as well. But the traditional industry, the construction areas, all that. I mean, of course, in the beginning, We just sat down and didn't know what was going to happen, and it stopped. But it picked up and it is back on track as it is supposed to be. So the larger sectors with a huge economy is doing very good. So it is those specific smaller, I mean not smaller, but it's specific sectors that still is closed down, that is going to be in trouble, and will need some more time than just this fall in 2021 to get back on track. And we would need 2022 as well. And then of course the bankruptcy will start to pick up when the payment schemes is going to hit those businesses. So yeah. So, but the risk and insight for business in Scandinavia, in general, Scandinavia has quite a transparent economy. It's considered to be a quite safe area to do business in, and it still is. But we need to look out for those specific businesses that is kind of hurting and still hurting, and then it is the service sector, But what we can see is that the one who is doing good before the pandemic will be doing good after pandemics as well. But the one who was in trouble before, they will have an even tougher time when things starts to pick up. Because if you don't have the strength, you don't have the liquidity, you don't have the savings to kind of manage the hibernating, or then you will have trouble when you start kind of, I guess, could you just use words like when you're waking up?
Right.
Yeah. So that will be the problem. So that's what you need to look out for in Scandinavia especially. Otherwise, you're safe. So in short term, if you're using, and you should use credit information report, and you should look into the scores and ratings of the company. If it is not good, it's even worse because of the pandemics.
Yeah. Right. Yeah. The companies that were not healthy beforehand did not get any healthier during the pandemic, and in fact are going to be in a lot of trouble when we get on the other side.
Exactly. So that is what is happening, and it goes the same actually for the consumers. I mean, most of the Scandinavians is better off during these pandemics. I mean, we've been saving money, we're paying down our credit card debts and short-term loans. We haven't been able to spend the money we used to spend in the same way. So we kind of have money in the pocket burning to get you. I mean, really like to get it out and use right. It. Except for the one who wasn't, who was kind of have a poor economy and low educated before the pandemics. They do have problems now, and it goes the same for the businesses. Right. If you're doing well before the pandemics, you are doing even worse after.
Right. Well, guys, that's been great information. We've got some questions that have come in that I do want to get to before we have to wrap things up. And folks, we do have some time. So if you have other questions, go right ahead. But I'm going to ask a couple of questions of you guys. Whichever one of you wants to answer, just jump in. Doesn't matter which one of you. But the first one we had back from a little bit ago, actually, was regarding the governmental assistance that you guys were talking about, whether it was tax deferring or what have you. They're asking, are businesses in Europe who've received this governmental type of support, are they limited in some way or any way on how they can use those funds? Are they able to pay down debt? Are they able to, especially debt to US companies, or does it have to stay within, say, the country? And I know this might be country specific, so if you can only answer for Norway and Italy, that's fine. But are they only able to pay down debt in that country, or how are there specifics to these programs that they're able to use that money for certain things and not others?
Yeah, there are no specific limitations, Nathan. So considering that we have two different tools available, one is the guarantee. So right. The state provides you a guarantee in order to receive a loan from banks, or the other one is a sort of loan, directly provided from the state and guaranteed from the state. So you don't have any limitation in order to use it, obviously. So you can pay your debt, you can pay your supplier, or you can invest. Obviously, it is important, as Per said. So they are analyzing the situation of the company in order to provide help only to the, only to who really need the help, and not to who is, trying to, arrange or fix a situation that it was already compromised before the crisis. So we don't have any limits, so no limits at all.
Okay, so no limits in Italy, but there are limits on who can get the money based on their particular situation. And most specifically, those companies that are truly affected by the pandemic were doing fine beforehand and had some real significant problems because of the lockdown measures and the different things going on with the pandemic.
That you had problems. You have to prove your figures with official financial statements and accounts.
Right.
So
sure, similar to what we have in the U.S. in some of the verifications that they have to do to be able to qualify for some of the assistance programs. And Per, is it any different in Scandinavia, in Norway, or anything like that?
No, it's more or less exactly the same. So the only limitation is who can apply for it, and you need to meet certain standards to get the either the business compensation scheme or the deferred payment for tax. But of course, I mean, there have been some discussions because you could obviously not pay out dividend to shareholders, owners, or you wouldn't be able to kind of raise the management salaries as well in that period. So that, I mean, that's just kind of obvious things.
Okay. All right. Great. So another question here was regarding the construction and housing industry here in the U.S. That construction and housing is going crazy. We're having a bit of a crisis almost with all of that. The question was how is that going how are those industries faring in your countries or your areas there in Europe? And are the imports increasing to help make up for that?
It's a good question. So far, because in this moment, in particular in Italy, the official statements are provided following a specific calendar. So the big amounts of information, official information, will arrive around June. So we have an overview in this moment, and it seems that based on assumption, on forecast, on estimation, the manufacturing sector should be more or less in line. It is expected to have a very interesting increase in 2021. I'm looking at the numbers and the expectation. So we are talking about more plus 7%. So it is expected to have a big increase because we have a lot of measures in place in this moment, in particular for the construction sectors, in order to help the sectors, and we have specific law that allow families to receive 110% of the expenses in order to have a full refurbishment of the house, in order to increase the energy level, the efficiency, and to use a solar panel and so on. So you spend 10 and you receive 100, and you spend 100 and you receive 110. So this is very interesting. And it seems that in this moment, this measure is working and is helping the construction sector. For the manufacturing, the expectation, again, in this moment stable, but in the second half of the year, a bit increase is expected. Okay.
And Per, what about in Norway in regards to specifically construction and everything? What are we looking at there?
Well, it is, I guess, the same as you mentioned in the US. It's kind of been a boost for the construction, and but it's kind of two different kind of constructions. You have the consumers construction. I mean, they're improving the homes, gardening. I mean, that's just been an amazing boost in that industry, but for the professional constructions as well. I mean, that's a kind of a sector that hasn't stopped during the pandemics. The only problem we had in Norway is the workforce. A lot of the workforce doing the construction in Norway comes from abroad, from other European countries, and they've been stopped from coming in. So that's been a problem for a lot of industries in Norway, getting the labor force coming in to help them. do the job. But in general, it's been a very good season for that kind of for the building and construction area, especially, and it goes the same. I mean, that's just something happened for the consumer as they need to stay home, and for the same thing for the retail business, for instance, for the shoes, clothes, and all that. It's been a quite a tough time. But for the sporting and outdoor retail, it's been a boost as well.
Right.
So I mean, it kind of just reflects the life we are living today during the pandemics. But as a business and as a professional construction overall, it's been, I mean, that business hasn't been affected. And as I said, the only problem has been getting the workforce we need coming from abroad into Norway.
Okay, great. Yeah, great insights there. Last question here, guys, before we wrap up, is from, they're saying that their company's seen a drop in manufacturing company using their services. Do you see the manufacturing sector specifically in Italy and Spain, and you did just touch on it a little bit, Luca, rebounding? Do you see them growing here as we go forward?
Nathan, it is expected, but when you see the aggregate number, you see only a portion of the reality, because in Italy we have a lot of subsectors,
Right.
So it is very important to understand which kind of sectors this company is working on, because it is really, you have difference and a lot of difference between subsectors. So it is expected overall, but we could have some differences related to a specific sector for this company. So it would be better for us to understand which sectors is the sector for this company.
Sure.
Okay?
Sure.
Okay.
Yeah, that makes sense. And folks, we will have links to both Per and Luca's LinkedIn pages on the follow up. When you go to the recording landing page, it'll have a link to their LinkedIn as well as mine. So if you want to reach out to them via LinkedIn, you'll be able to do that. And Per, what about that? Same question for you. I mean, manufacturing in Norway and Scandinavia, I mean, how is that expected to fare as we start coming out of this and seeing kind of the world anew? You said come out of hibernation is kind of a great way to think about it.
Yeah, well, as I said, I think that goes for manufacturing as well. But I do agree with Luca there. There is different sectors in manufacturing as well. But in general, I mean, we haven't had that failing in that economy at all. I mean, it's been as it used to be, more or less overall, so that's what is interesting. I mean, the major effect of this pandemic and closing down and this hibernation has been into the service sector, and what we did expect in the beginning, for a year ago, we said, well, this will affect the whole economy, all of it, because you start with a small sector and then it just expands and affects each other. That didn't happen. I mean, it stayed into this service sector. So the manufacturing part hasn't been as affected as at all. But then again, it goes for the same. There has been some closing downs due to not being able to get the workforce on site, actually, and especially for those who is depending on the workforce coming from abroad. And there is a lot, especially in the western part of Norway, with the fish industry and manufacturing, and that has been affected a bit.
Well,
yeah.
That you guys have been great. This is a lot of information here, folks. I know this is one you're going to want to go back and listen to again, and that's why we're going to send you that recording. Luca, Per, thank you so much for taking time out of your evenings, your nights almost at this point, to spend some time with us here in the U.S. and talk to us. Your insights and your expertise is wonderful, and I really do appreciate you doing this for us. And hopefully here soon we'll all be able to travel and do some sort of in-person Credit Safe webinar together in Europe. Don't come to the US, we'll come to you. And we'll all enjoy some salmon from Norway and some wine from Italy, and we'll have a great time. And we'll just do that. But thank you so much, guys. Thank you all for joining us. Anytime you want to know more about the Credit Safe webinars, please just go to creditsafe.com/webinars, and you can see all of our upcoming and previously recorded webinars. Folks, have a great rest of your day. Thanks for being with us. Bye.
Thank you. Bye.
Bye-bye.